please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Okay, there goes the bell. It's a 0.25% higher, so 10,477 and 34,092. So that's a 0.25%. Okay, 0.2% now. It's given up just a little bit. Both the Sensex and the Nifty giving up their early gains by a tad. Okay, now it's coming down to flat terrain. The Sensex, the Nifty, just up 3 points. So it's almost no gain at all. 2 points, 1 point higher, and I think it's heading into red terrain. Yes, it is red by about -2, -3 as I speak, -4, -5. Okay, it's fast getting into red terrain. So completely unable to hold the morning light green that we saw in the stock, and that Tata Steel is perhaps one reason why it's falling. Tata Steel is down 2.5. So the big leverage that it will take on is perhaps disturbing this street. As well, IndusInd Bank, Axis Bank also in the red. So deeply in the red, that's 1% lower. And that's Yes Bank as well. So that's pulled down the Nifty Bank. Now all indices are in the red. The Nifty and the Sensex are down by a good percentage, 0.2% lower. Is there anything in the green? Yes, ICICI Bank is still holding in the green with a 1% uptick, as is Kotak, HDFC. And then, of course, there is Vedanta, TCS and Oro. But not too many green stocks at this point in time. It's a third of a percent lower. So in 2 minutes, the markets have lost.
We are below Friday's low. We are below Friday's low. You know, I just starting before Sonia on that, because this clearly is a bit of a weak opening. I mean, whatever gap up was there was sold into, and now we are at the Friday low on the Bank Nifty and on the Nifty, actually slightly below that. But I'll talk about that in a bit. First, let Sonia go through the mid-caps.
Oh, absolutely. You know, the mid-cap index is down about 0.2%. The PSU banks are getting hit very hard this morning. UCO Bank is down 10% right now. Volumes are picking up over there. Union Bank is down almost about 5% or so. These are the larger ones, but just look at the smaller banks and how they're cracking. Allahabad Bank, another 5% gone over there. PNB is down another 3% So the entire gamut of PSU banks are under intense pressure right now. City Union Bank, despite that clarification from the management, the stock is down almost about 5% or so. A lot of other losers, especially in the NBFC space, etc. So something like a Saturn Credit Care is down and out. But let me talk about some gainers that are bucking the trend this morning. You have Natco Pharma, that's up in the green after its Hyderabad facility has got a successful inspection from the US FDA. Aviation stocks are doing well. Jet Airways, SpiceJet, Interglobe are all in the green, as you can see, up about 1.5%. GVK and JCorp, because of the Navi Mumbai airport, getting that green signal, all up about 1 to 3% KPR Mills, there's a buyback that the company would undertake on the 22nd of February. So KPR Mills is also up almost about 5%. But leaving stocks few and far between, this market is under pressure definitely. The Nifty now has gone past that Friday low.
Oh yes, and the first bar on the Nifty and the Bank Nifty is a big red one. The Bank Nifty opened at 25,300, the future that is, made a high of 25,324. And from that point, it had almost a 200-point decline. And similarly for the Nifty, if you see the morning chart, it opened at 10,470, a high of 10,485, and now at the low point, 60 points gone. Ashwani, thoughts on the first trade? It's extremely bad considering the kind of gap up that we had.
I think it's extremely good because all sectors are in the negative. Early morning, you have a slam dunk. I have gone in and bought Bank Nifty. I don't trade the Nifty as much, but even on the Nifty you could buy because, this sort of a early morning squeeze and everybody being on the same side and everybody is killing banks, this cannot last for too long given the overall global backdrop. So put a decent stop, say a 100-point type of stop on Bank Nifty, say 50-odd points on the Nifty. And I would think that this has a good chance of turning around. Obviously, you have to keep risk management in place, but this is a bit of, what do you call basket selling, etc. And it is happening at a strong support. So my sense is that Bank Nifty and Nifty could turn from here.
So what is the risk management? Will it be 25,100? And on the Nifty, will it be 10,400? What will be the risk management?
See, risk management is basically 10,350 on Nifty.
Okay.
Say 25,050 on the Bank Nifty.
Okay.
And you take it from there, 100-point risk. If it starts to work out, it will work out fairly big. So Bank Nifty, you could make 200-300 on the upside. Nifty, you could easily make 150-200 on the upside, because there's been a lot of selling from 10,600. Now, unless we get some sort of global support or continuing bad news, the lower end of the band may not go immediately. So my sense is that some amount of short covering could come in at these levels.
Okay, some amount is already visible actually. The Bank Nifty is now back in the green. But could it be a volatile day, Ashwini, where you may want to sell the rallies as well? Or are you clear that the low has been made for the day and from here it's all about short covering now?
See, the whole point is there will be short covering, but at higher levels pressure remains. So, once the Bank Nifty recovers and gains maybe a couple of 100 points, closer to say 25,400, 450, that's where you, start to take your longs out and then see if shorts are possible. Because see, everybody is getting on the same side. The weekend, that's a very interesting phenomena, because the weekend builds opinion. The kind of, negativity on social media, on news channels about banking, it's like, banking is shutting down. So that way, that helps build shorts. So my sense is that once this first half an hour is over, I think bigger short covering should happen. Okay,
for now, there's a clear preference towards the private sector banks for sure. ICICI Bank is leading from the front, up about 1.5%, followed by Yes Bank, which is up 1%, Kotak Bank up about 0.5%. So the market is clearly distinguishing between PSU and private banks. But Sudarshan, comment on the market opening. It's flattening out for now, so the cut is getting arrested. What would your thought be on individual names?
Well, first the Nifty, the idea was to buy Nifty put options when the market opens, and a second buying opportunity comes if the market rallies intraday, and it could towards 550 or 600, in that range. Apart from that, banks, private sector banks are an attractive buying opportunity. I would stay away from steel.
Okay, Ashwini, sorry Mitesh, your thoughts on market opening?
So I don't think very good, but very clearly I think the support levels which I was talking about have been held. 10,400 on the Nifty hasn't yet been broken. We just had a low of 10,405. The Bank Nifty didn't break below 25,050 mark, so that might lead to some kind of a stale kind of a day, not much of movement happening. But in case these levels are being broken, then only we go short. I don't have a signal of reversal from the support levels as yet to take a long position. So for the timing, I'm in a wait and watch kind of mode. But if 10,400 on the Nifty breaks or 25,050 on the Bank Nifty breaks, we'll go short.
Okay, by the way, just want to point out one banking stock, South Indian Bank. Just pull out the intraday chart of that stock because among the banks which have exposure, South Indian Bank is the one which has, the smaller banks, a bit of an exposure to Bhushan Steel. And that is getting resolved. Technically, that's a big amount for South Indian Bank, and that's why that stock is actually also participating in the rally and is now moving to the high point. But Ashwini, what would be your big call of the day?
Big call is get long on the market. This sort of negativity often does not last. So chances are that Jet Airways, Escorts, private banks particularly, because if somebody is selling PSU banks, PNB is again down, what's he going to buy? So I think a lot of money is likely to move to ICICI Bank, HDFC Bank, etc. So I would think that the market probably low of the day could be in place. Difficult to say whether that will get taken out, but first you'll have a strong rally and then maybe some profit booking.
But what's the positional trade, Ashwini? Even actually the Bank Nifty is already behaving exactly as you have forecast. It's pulled up from the lows of the morning very smartly. But if you're buying for the contract, if you're buying for the month, or if you're trading for the month, then what's the trade on Nifty Bank?
See, the problem remains that, if global markets restart a rally and continue to move higher, it becomes very difficult for one market to go on falling. So, at best we could be range bound, but we are hanging around the lower end of the range. So positionally you should be short till 10,600, 650 is taken out. But my sense is there could be more range bound because, we don't have great global support and local news may not make you break the range so easily.
Okay, by the way, Jet Airways is now the top F&O gainer and it's picking up quite a bit of pace as far as volumes are concerned as well. Sudarshan, any quick thoughts on aviation stocks and anything that you would buy even at this juncture?
Yes, that is Indigo. And Indigo is a buying opportunity for the positional trader.
Okay, okay. Mitesh, anything that's come into your radar now?
Yeah, so I am looking at Bajaj Finance. I think, Bajaj Finance, if it starts breaking below the day's low, 1650 being an important pivot support, if that breaks, then I'll go short, otherwise just wait it out.
Okay, the other stock which is seeing a bit of a rally now is Apollo Hospitals. Now, keep in mind on Friday that stock ended at the low point despite that upgrade, and the market was weak. So, obviously, every stock was weak, but there's a bit of a recovery which is happening right now on that. But it's turning out to be a bit of a commodity day as well once again. So, Vedanta is up a bit. India Cement's up a bit, Ambuja Cement's up a bit. Ashwini, from the cement pack, anything?
See, cement rallies have not really sustained. Vedanta metals were doing well. So broadly, it's either metals or these aviation stocks. So there isn't really great sectoral trend. The idea is that wherever you have big short positions, that is where you should expect short covering. So that should be the play for the day.
Okay. Sudarshan, did I ask you any aviation stock you are looking at?
Oh yeah, I told you about Indigo, and that's an excellent buying opportunity for the positional trader.
The thoughts, Vinod?
Yeah, that's all. We are looking at basically investors if they want to buy. I think insurance is the sector which is FI sale proof, where they're just building the portfolio and it is very nascent.
Okay, a couple of other stocks making the highs of the morning. Colgate, that stock is at the highs of the morning. And just want to pull out the intraday chart of Union Bank. Of course.
It's taking us walloping, isn't it?
Yeah, but this intraday minor recovery which is happening right now, if you see the charts of even PSU Bank. So after starting at about 111, so they're about, it's moved to 114, still down about 3.5%, but picking up a bit. Amara Raja is the other one where you have seen a bit of an intraday gain.
Okay, well, on the downside, some of these pharma stocks actually cracking a bit. Glenmark has hit a new 52-week low, so it's really gone to new lows this morning. And Cipla is another one that's under a bit of pressure right now. But let's thank all our guests for joining us and taking us through the market opening. It's a bit of a choppy opening, you'd have to say. The Nifty is now trading with cuts of just about 12 odd points. So flat at the moment, but lots of intraday volatility. Let's invite our market master for the day, Ratnesh Kumar, the MD and CEO of Bob Caps, joins us now. Ratnesh, hi, good morning. We've seen the markets actually come under a bit of pressure over the last few days and weeks, and this market is underperforming most of our global peers as well. You think that's a trend that could continue in the very near term?
Well, I think what you have been seeing is a little bit of risk aversion which is coming in globally because of oil and as well as fears of rate hike. So essentially, in those situations, you naturally have a little bit of laggard performance coming in from emerging markets. And India is coming off a pretty good year in terms of 2017 performance. So that could also be a reason. But I think as an economy and as a corporate sector, things are looking up. So this could be temporary.
Okay, by the way, the market is getting a bit volatile, and just take a look at NIIT Tech's intraday chart. That stock is now making low of the morning. So it's not that just market had slammed and then recovered. There are some stocks which are making lows as well. Ratnesh, good morning. So do you think we are now at the cusp of a big correction, first decent correction? We haven't had even a 10% correction so far in this bull market. Do you think this one could extend to, say, 15 or, maybe even say 17, 18%?
No, I don't think we are at a cusp of a big correction. We've just had the third quarter results completed. For the first time after many, many years, you had a double-digit earnings growth coming through in the third quarter. And I think the earnings momentum will only get better. So there is no reason to believe that there should be a big correction. Naturally, there is consolidation which is happening. The market is also trying to sort of absorb some of the negative news which has come through in the recent days, and then we will move forward, especially once the fears around rate hike and those kind of things settle down.
Okay. Good morning, Ratnesh. Actually, confusion abounds maximum in Bhushan Steel. We just had Mr. S.P. Tulsian explaining that he thinks with the Tatas putting in money, a year down the line, there will be value in Bhushan Steel. The stock is trading 20% higher. How should investors approach? I mean, there is really huge confusion on this.
So, be it in the listed space or in the unlisted space, I think resolution of some of the NCLT cases which are there, the ones which have already gone in and the ones that will go in and eventually get sorted out over the next 6 to 12 months, it could be one of the bigger stories which plays out in the market. Naturally, what we've seen so far is the negatives related to all those bankruptcy filings, but resolutions of some of them will certainly be a positive for the banking sector as well as for the market.
So are you saying you cannot take a call on Bhushan Steel itself till you see the nitty-gritties of the Tata Steel package?
I wouldn't sort of like to comment on any specific company, but I think it is just I think on a broader picture, if you see the NCLT cases which get resolved, it will have a whole lot of different positive impacts, which probably has not been as much sort of looked at or appreciated in the market, and that could play out over the next 6 to 12 months.
Okay, you also told us that this market, according to you, is not at the cusp of a big correction. We've so far seen about 7 to 8% of a fall from the highs. Would you put fresh money to work now, or do you think that you would wait a bit before you sort of invest in even some of the large cap names?
Yeah, why not? I think certainly a market is good for investment even at this stage. Naturally the aggressive returns that we've had in 2017 will not be repeated this year. But on a 1 to 2 year basis, when the earnings are recovering, the macros in terms of growth will also be recovering. Certainly one could expect reasonably decent positive returns from the market on a 2 year basis.
Okay, so Ratnesh, in that case, what should be the portfolio stance? Because we've seen a lot of these stocks come off a bit, the market leading stocks like Maruti, iShares. We have seen IT on the other hand gain some traction. How would you approach individual sectors and stocks from here then?
So the approach to portfolio in this market firstly has to be a little bit far more large cap centric, because naturally the mid caps have had a heavy performance, huge performance. So bar some specific cases there, it should be more large cap focused. Secondly, it should be more domestic sector focused, because the recovery which is coming through in the macro is more on the domestic side. So those will be the two paramount themes which will be there that I would look at in terms of portfolio building. So within that context, I would say sectors like auto ancillaries, EPC construction, capital goods companies, and also banks. Those would be the areas to be at.
Okay. What about aviation? As a sector, the numbers are looking better with each passing month in terms of passenger numbers.
So aviation, I think as a sector is not that meaningful in the market, but naturally the sector parameters are coming out quite good in terms of volumes, the traffic, etc., which is good news for companies in the sector. But we don't track aviation, so I won't be able to comment. And as such, from market portfolio positioning, it's probably not that significant.
Okay, well, Jet Airways now is up almost about 3% so looking pretty good over there. But you spoke about auto ancillaries that you like. We've seen some of these auto ancs like Motherson Sumi correct quite a bit post their numbers. There was a bit of weakness over there. Would you use it as an opportunity to buy?
Yeah, certainly good auto ancillary stocks. I think in overall market you've seen some softening, as you mentioned, in the last couple of weeks. So these are the times when actually where the growth is reviving, which is auto is certainly one of them. Those sectors and subsectors should certainly be looked at in this softness.
Okay, by the way, there's some serious damage in a lot of these mid caps, and some of them are pretty large stocks. Look at Sun TV's chart, and this is a stock which was down big time on Friday as well, and right now it's almost as if someone's left just selling large quantity. Look at that move, 4% lower. NIIT Tech, we spoke about that stock, is right now at the morning low, and that stock right now is down about 4%. This is not looking like a good screen right now, because if you take a look at the advanced decline, it's approaching about 2:3. The Bank Nifty is once again in the red. Nifty, of course, has been there. Tata Steel is down about 2.5%. So let's see. I mean, it could be quite an interesting day. The Monday of
big damage is coming from the banks, isn't it?
Yes.
UCO, Allahabad, Union, IOB.
UCO, of course, is news driven, so you would expect that because they have exposure and they've been talking about this. They expect this $300 million or whatever to be repaid by PNB. But of course, PNB is already given an indication that we had already warned you. So
no, that's
UCO's
actually a big fight now. If both sides say that we will not pay,
exactly.
Does PNB become an NPA? Then what happens to the loans that other banks owe PNB? Will they not pay? You can't have a banking system that doesn't pay each other. So the RBI will have to intervene, though RBI clearly said that they have not given any instruction to PNB. The stalemate cannot go on for too long. Any thoughts on this, Ratnesh?
No, sorry, I don't know anything much about this incident.
No, we know that there was a huge tug of war at the IBA meeting on Saturday. We also know that the Reserve Bank has clearly said in a press release they have not given any instruction to PNB. So it looks like everybody will once again go to RBI and knock at their door, but it has to be done within 90 days. You can't have PNB as an NPA on the books of banks.
Yes, so that's interesting. But Ratnesh, thoughts on the crude, whether that's a bit of a risk for incremental risk for this market? We saw a move towards 70, then it slipped back towards say 62 thereabout, again making a move back above 65.
No, I think naturally anything above $70 on the crude is an element of risk, simply because of the fact that our own post GST, the revenue collections also is an additional challenge for the government. And naturally you had you are going into an election heavy calendar over the next 12 months. Whatever additional steps that might be taken to sort of improve the agriculture side of the economy, some of that could be inflationary as well. So I think, bar the crude part of it, I think the larger picture you look at is whether how far the inflation goes up over the next 12 months, and the sort of impact it has on the bond yields and hence on equities. So that you could certainly count as one of the risk factors for the market on the next 12 months or so, in addition to the heavy election calendar.
All right, Ratnesh, we leave it at that. Thanks so much for joining us. By the way, the market's not in a great place this morning. We've broken the Friday lows and the Nifty is now down almost 0.3%. The macro data has also been under a bit of pressure lately. The growth in exports has slowed down to 9% in the month of January. This is the first dip to single-digit growth for the first time in 3 months. Remember, it was 12% in the month of December and much more in the month of November. Is there worse to come? We have two gentlemen joining in. S. Ravi Kumar, the President Business Development at Bajaj Auto, and Ajay Sahai, the Director General and CEO of the Federation of Indian Export Organization, join in with their take. Gentlemen, morning to both of you. Mr. Sahai, I want to start off with you because exports have slowed down considerably over the last 3 to 4 months. Where does the problem lie, and do you expect further deceleration as far as export growth is concerned?
No, in fact, if you look at export growth figure, they looks pretty impressive on the face of it. But if you analyze, they also show that everything is not good with the export growth. The very growth rate is coming down from 30% to 12% and now to 9%. Secondly, this 9% growth has come because petroleum exports have done exceedingly well. Out of total 9% growth, 6% has been contributed by the petroleum sector. On the contrary, the labor-intensive sectors, whether it's carpet, handicraft, textile, apparel, they are showing the negative growth. There is little modest growth in gems and jewelry as well as in leather sector, and that's why I think it's a cause of concern, because our employment-intensive sectors in exports are not doing well, which is definitely a challenge. There are a couple of factors. I think the fundamental factor is that most of the labor-intensive sectors are losing their competitiveness over a period of time. An immediate factor definitely is the liquidity problem, which has been caused by the GST refund. We hope that, and in fact, we have already requested the government to go for a massive clearance drive and clear these backlog by 31st of March.
Okay, Mr. Sahai, I'll come back to you on that point, on whether it is productivity or whether it is credit that is the problem. But let me pose the same question to Mr. Ravi Kumar. Mr. Ravi Kumar, although we have seen a fairly decent growth in global trade and countries like Korea are growing their exports, at the highest pace in several years, at 22-23% despite a high base, India is not taking advantage of the global trade. Any thoughts?
Lata, I think the country level and global level trade movements, I will leave it to the experts to analyze. I can talk only about two and three-wheeler industry and specifically about Bajaj. Basically, because Bajaj is the largest three-wheeler exporter. Every 3 out of 4 three-wheelers are exported by Bajaj, and similarly, every 2 out of every 3 two-wheelers are motorcycles are exported by Bajaj. So we have a fairly good standing in exports. But that said, I can talk about our company and the outlook there.
Okay.
Yeah. So please go ahead. Yeah.
No. Actually, our purpose for this discussion was to find out what is really worrying Indian exports. Aside from your company, Mr. Ravi Kumar, the general export growth has only been 9%. Import growth is even touched 40% in some months, and certainly running at an average rate of 25 to 30%. So clearly, probably even what we can buy from India, we are buying from abroad. Maybe because of a breakdown in supply chain, we don't know. So, we really want to see what is troubling exports and not what is going right, because something seems to be troubling as Mr. Sahai says. Mr. Sahai, what's your view? Is it that we are in many areas, like you pointed out, ready-made garments and some other sectors, even gems and jewelry has been flat to negative. Is it a productivity issue or is it a liquidity issue?
No, I primarily feel that this is basically a productivity issue. Let us reconcile to the fact that wage arbitrage is no longer with India. Countries in South Asia and Southeast Asia, including Cambodia, Myanmar, Laos, Bangladesh, Sri Lanka, Pakistan, they are in fact having lower wages than us, and they have a better productivity. So I think a lot of this has to do with the skilling of worker. Unfortunately, we have not seen much movement on that, though of course we have National Skill Development Mission. But I personally feel there is need for industry government partnership so that we skill the worker in the areas where the jobs are required in the industry. Of course, the currency is also putting some pressure on that. We have seen that Indian rupee has appreciated as against the devaluation of most of the currencies. Thirdly, I think liquidity is also an issue which I have already highlighted. The cost of credit is definitely a challenge for Indian exporter. To some extent, the SMEs manufacturers have been provided interest equalization, but I think similar facility needs to be extended to the merchant exporters who contribute to around 30% of exports, and even the service exporter, because cost of credit is equally important to them as well.
Cost of credit all the while was the same. I mean, it is not that cost of credit suddenly has gone up. Indian exporters, say 4-5 years ago, when global trade was doing well, we did manage 23, 24, 25% export growth. We have averaged close to 30 billion in some months. But this falling closer to 20 billion a month has happened more lately, despite global growth. So, I mean, is this a GST thing, Mr. Sahai, that supply chain has broken and that will be put back? Or is this something more long-term, as you are putting out, that we have permanently lost competition, lost to the competition?
No, in fact, I will say that GST is one of the factors. You have rightly said that in the past, with the same credit rate, we have done exceedingly well. But in those times, Indian rupee devaluation has supported the export sector. Let us also recognize the fact that in most of the sector, we are in a very price-sensitive segment. So the rupee movement definitely affects the exports. And that's why the long-term solution may lie in integrating into the global value chain, putting focus on branding, which can take away from that. But the fact of the matter is that when your profit is coming down, even a little factor like interest rate affects you definitely.
You know, when we spoke with you the last time, Mr. Saha, you had said that with respect to GST, a lot of the tax refunds were getting blocked post GST coming on board. You know, we also have other issues like the e-way bill, which is affecting certain sectors like carpets, textiles, etc. Your own thoughts on you know, any of these issues have been resolved since the last time we spoke, or do you think these are problems that will continue to persist?
No, I think these are the issues which has been flagged with the government. Unfortunately, we have not been able to make much headway as per the figure which has been shared with us in respect of the IGST refund. Only 30% of the refund which has been filed has been cleared, and in respect of the ITC, the problem is more acute because out of close to 80,000 applications which has been filed online, only 44,000 applications could have been submitted manually, and that's why that speaks volumes of the effort which needs to be done at the government. Why an exporter who files an application online and debit his electronic register will not file application manually? The fact of the matter is that the tax authorities are simply ignorant. There has not been any detailed procedure which has been devised by the government, and exporter is running from pillar to post to file an application manually. We have initially pointed out that manual application will create a problem, and the fact of the matter is that this is adding to the problem at the end of the export.
So you're not getting any of the input credit now, or not easily?
I'm not saying I'm not getting it, but that's the only, you can say, a fraction of what we have already applied for that.
Okay, okay. Mr. Ravi Kumar, you're the one who doesn't have the productivity challenge. So do you think that this is a problem only for some sectors of exports, and you know, where you have international standards, there isn't a problem, whatever the price of credit?
Number one is, of course, productivity is not a problem for us, like you mentioned. I will agree with Mr. Sahai that the currency can, which was much more supportive, and it was in a different trajectory a couple of years back. That has reversed, and that can really cause a lot of trouble even going forwards. Look at the way the oil is again firming up. The second thing is, of course, same way the interest outlook a couple of years back was different, and the interest outlook today is very different. And these two things, coupled with, let us say, the input cost, base metals, you know, aluminum today is 2,200 plus, and only a few months back, let's say about a year back or something like that, we are talking about $1,400, $1,500 to a ton. So I think input costs firming up, oil prices firming up, the currency, the way it can dance, the interest rates firming up, these are all realities that are starkly facing us.
Okay, gentlemen, thanks a lot for your time today. By the way, the market is now at the low point of the morning, and that minor recovery really has been sold into. Just want to pull out the intraday chart of the Bank Nifty in particular, because that now is at the low point. The Nifty is there as well, and a lot of stocks are headed there. PSU banks, of course, in particular. Tata Steel, by the way, is 4% of the highs, and you know, 666 now on that stock. Let's just get some thoughts from Ashwini as well before we take a break. Ashwini, there's a second round of selling which is happening right now.
See, my sense is that we fell, I think, 350, 360 on Friday. Today we've fallen about 120. I don't think this is the time to sell. Possibly, if you are brave, you can buy something. And I don't think this sort of selling can sustain. But 10,350 is the stop. And on the Bank Nifty, broadly, 24,950, 25,000 should be your stop. I think this is early morning kind of decline. And often we have seen reversals happen, you know, as the day goes forward. So that way, for the moment, Jet Airways is a buy with a stop of 754, target of 772. Vedanta is a buy with a stop of 319, target of 334. And ICICI Bank is a buy with a stop of 320, target of 334.
Okay. You know, Ashwini, in the morning, when you bought the first dip, you said your stop loss would be 25,050 on the Bank Nifty. You're moving your stops lower now to 24,950. You're retaining your buys.
In this sort of market, you will have to give some sort of space to your trade. So just extending it by 50, 70 points.
Okay. At the moment, it's 25,025.
Okay, let's
see
do one
where
thing.
Support comes.
Yeah, we'll take a break and actually discuss more stocks with Ashwani, Mitesh as well, and get a management as well. Promises to be quite a